Can I talk about some
Yeah.
general account safety rules?
Yeah. Well, yeah,
Yeah.
you can talk about whatever. Hi, everyone. Welcome to the coffee break. Lionel from Heritage Bank. Sorry, I lost my voice. I was talking too much yesterday. Sponsored today. So thank you, Heritage Bank. And Lionel is going to give us some fun information about loans and banking and whatever he wants to talk about for the next 10 minutes.
All right. So I'm gonna talk about some just general accounting practices. I had a client is going through some stuff right now because their accounting department issued multiple checks. The checks got stolen out of the post office and they reissued the checks and did not stop the first checks. So then all the checks got deposited and they were asking how do you get reimbursed? So now we have to file a bunch of paperwork, they have to file a police report. This all could have been avoided if the accounting people would have just placed the stop payment on the first set of checks. So really easy. I mean, I know there's probably people with accounting backgrounds. It's just accounting 101. You protect yourself, right? And also to the managers out there, if you're responsible for reconciling your client accounts, keep in mind that these are business accounts. HOA accounts are business accounts. So you don't have the same time frames as you do for a consumer account. So you want to be looking at the account regularly, at least once or twice a week. And you want to start that, do you see something odd? Contact your banker, ask about the origination or ask how that cleared or it wasn't issued by us, and start that process immediately. Um, Let's see what else. Online banking stuff. So we always recommend that you have multiple users on a transaction, especially if you have a transaction. Let's say you're transferring between the operating and the reserve. That's fine. I'm not leaving the bank. But if you have transactions that are leaving the bank account to an outside source, you want to have dual control on that transaction, whether it's a ACH or a wire. Some banks don't allow you to wire out of HOA accounts because of the risky nature of it. But a lot of banks, of course, they also have the ability to do the ACH. So you want to have dual control. Same thing. Some associations will open an account. I'll get a call from a board member, and they'll say, "Well, we don't want any checks to pay if they don't have two signatures." That's not a bank. That's not something the bank's going to govern. So that's an internal control to your association. So somebody should be verifying that the checks, if that's something in your policies or bylaws, that's something that needs to be governed on the user end. So the bank, we don't sit here and look at every single check. We do have a system with an algorithm that pulls unusual transactions, and then the person does look at signatures and all. So we catch a lot that way. Or if an old board member is still signing checks, what happens is the management companies have electronic signatures, and the signature card changes, but they don't update who the signer is on the checks on their end. So that could happen. So anyways, to sum it all up, you want to look at the information that's presented to the bank. You'll get the bank statements. You should be getting a board package. And you want to be transparent in that. So that way, nobody can come back later and say, well, you're doing this unauthorized. Not, people call me all the time when they're not happy with something. And I always say, well, did you look at the contract? Did you look at what you agreed to when you went to that management company, or do you know all the rules? Can I explain some of them to you? What's your specific situation? And so you want to just avoid looking like something's going wrong, looking like you're creating transactions that are not authorized. So you want to, like I said, be transparent and show the board, if you're paying an invoice, include a copy of that invoice so that way they know what you're paying. So that's kind of security in a nutshell. I do like to have lunch and learns with management companies on things that they can do to ensure that people are being provided the correct information. You could create online banking users for the board members as a view only. You can make sure they get, we can mail a separate statement to multiple parties. And so as long as they're getting that information, there's going to be less questions as to why things are happening the way they're happening. Any questions?
Hey, Lionel, there might be questions on that, but I know that there were Becky wrote a question in the chat as well. I know that there were you and Chris were both communicating with me on this. I think that they would also like to hear a little bit about loans.
Sure, I can talk
Okay.
about loans.
Okay. I know that Chris said so. Anything you know about loans, all about loans.
All
But,
right, so
Becky
I'm
did ask
gonna
a question. Sorry, one second. Lionel, how do you?
let's take
Yeah.
care of the questions and I'll move on
Okay.
to the loan.
Thank you. Lionel, how do you feel about a company's practice that they have a trust account that holds the
Mark?
association funds before they go to the association's bank account?
I'm gonna read that again.
Mark,
Someone's yelling.
I can't tell who's got somebody
How do
yelling.
you
Damn
feel
it.
about companies' practice that they have a trust account that holds the association's funds before they go to the association's bank account? So you should know that before you sign any agreements. You should ask that question. And if you're not comfortable, then you shouldn't sign up for that service, because there are accounts that are commingled. So they have one trust account with multiple associations depositing to the same account. And so you should know that up front before you sign any contracts, if that's the way they're going to manage it. Because then, yes, they have an accounting for it on the back end, but you're relying on them to provide you an accurate accounting instead of having that account separate. Very good question. Was that the only one?
No, I have a question, but I have a comment on that too, because I had no idea that stuff like that happened. As an insurance agent, I have to fill out applications regarding your crime or fidelity insurance. And that's one of the questions is, does the management company commingle? And as a former manager, I always thought that answer was no. So if the answer is not always no, I'm freaking out right now. Second, and
it mostly happens on the commercial side.
Okay, good. All right, calming down.
Mostly, not on the HOA side, but if the HOAs are doing it, I don't recommend it. It mostly happens on a broker trust account where they're managing properties and renting.
Okay, that makes me feel so much better. Thank you. So the question I have
Mark,
that I've seen,
please, this is going to be over.
and there we go. Okay. The question I'm getting from a lot of board members, obviously insurance premiums are higher than they've ever been. And many associations do not have the funds, even in their reserve account, to pay for their insurance premium, which is only for a year of premium. They're asking if they can get loans for that. I don't know the answer to that question. I know we have premium financing arrangements that we can set up with ridiculously high interest rates, but do HOA banks have any programs, or how are you handling those questions? Is there anything available?
So right now, I haven't done any loans for that. It's something that we are talking about because it's such a it's a newer it's a newer obstacle that HOAs are facing, right? It's very recent. And so I've had maybe one conversation with someone about it, but currently we don't do financing for that. But we are talking about it, and there's got to be a way that us, the banks, can help with that. Okay, so just real quick about the loans. Most of the time, the loans are used to pay for the work up front. Okay, so you have a huge project. You've been putting money into the reserve account, but you don't want to. The last thing you want to do is liquidate the reserve account and bring it to zero, because then if you have an emergency, you're not going to have any funds to pay for that emergency. So what usually happens is the board will either talk to legal or their management company and then say, hey, we should consider a loan. Yes, the loan is going to incur fees, of course, because that's how banks make money. And so the advantage to having a loan is you're going to be able to go to the members and explain to them that you're going to have to do, increase assessments or do a special assessment. But because you're going to take out a loan, you're going to be able to spread that pain out. Instead of having everybody pay $30,000 today, you're going to have a loan, you're going to get a loan, and you're going to spread that cost out over 5, 7, or 10 years. Okay. And so what we look at is you're going to submit an inquiry sheet to your bank. And then I'm just going to talk in general. You're going to submit the information to your bank. You're going to ask, give them the dollar amount, give them what the project is. You're going to give them a timeline. So you're going to coordinate the loan request process with the management or construction manager, so that your bids are going to still be valid, because you don't want to get a bid and then start the loan process. Kind of want to do it concurrently, and so that it all happens at the same time, especially if you know that you're going to take a loan out. So the bank's going to look at your financial information, recent tax payments, your budget. We're going to look at your reserve study, where most of them are going to have a minimum unit requirement. They're going to have a percentage of owner occupied requirement. And then we're going to do a cash flow analysis. So we're going to look at your dues. We're going to look at how much you're putting into reserve. We're going to look at your monthly bills. And then we're going to put all that information, come up with a loan amount, and then we're going to look at how much your loan payment would be, and so if you take a 5-year loan, we're going to look at the next 5 years of your reserve study and see if there's any other projects that are coming up that are going to coincide with that loan period. Then we'll do, like I said, a cash flow analysis. If it looks like it's going to cash flow, the bank issues an offer letter. The offer letter is only good for 45, 60 days, depending on your bank. Then you go back to the board with the letter. You get that signed, submit that back to the bank, and then the documentation process starts. Once the documentation process starts, usually if it's a larger loan, it's going to be a line of credit up front. You're going to use that line to pay for the phases of the project. Once the project is over, it turns into a term loan, and then it locks in the rate. And then you're going to pay back the loan. Most banks will have some type of early prepayment penalty, depending on the term of the loan. So you got to get all that information up front, ask all those questions up front, so that you're not, all of a sudden you want to pay off the loan, but you didn't ask about the early payment penalty. Now you're going to have to incur even more fees. So as long as you work and ask the right questions, you won't get caught with any surprises.
Sorry, I had to mute everybody. We do have some really good questions in the chat. The first one is, are there different interest rates for an HOA loan compared to a homeowner getting a loan?
The interest rates are actually pretty similar. So yeah, that's a good question. Of course, right now the interest rates are high.
Yeah.
We're in it's good for deposits, but it's bad for loans.
Our next question is for loans, do you think it is helpful that a manager or the board to create a loan plan, which is like a business plan to help sell their community to the bank?
Yes, very helpful. Because like I said, instead of the special assessment being everybody's got to pay $30,000 by the end of next month, you can say we're going to spread that over a 5-year period. And I think you're going to get more votes as a yes when you come with a plan to the meeting and say, this is what we're planning on doing, but we need to pass a special assessment. And not everyone in your community is going to be able to write that check.
A follow-up question from that. Do you have a better rate program or options for an age-restricted community?
We do not. It's all the same program. Yeah, so people on fixed income, it becomes a problem. And if your community doesn't qualify for a loan, the other option would be for everybody to get their own loan. They can't write a check. Hopefully they can get an equity loan, or hopefully they can go to their bank and get a loan to pay for the special assessment.
And I have given everybody the option to unmute themselves back. I had to pause that while Lionel was speaking. I apologize. So if you have any more questions, please feel free to come off mute and ask.
Thank you,
Lionel.
Rachel. And, I can give you general information, even if you're not my client. I can give you some information that you can use to approach your bank or approach your manager that handles this part of the business, and approach it with a plan. If you do everything off the handle, then it's going to go off the handle.
As with anything in life, right?
It's nice to see everyone today, and I'm glad you all made it. Chris got tied up, so I'm sorry she couldn't make it. I see another question. What happens to an association that defaults on the loan? So most banks are going to take a UCC lien on your monthly dues. So the bank's going to pay themselves back first and then give you the rest of the money. Don't want to default on a loan.
That was really great information. Does anyone else have any questions? Oh.
Yeah, so it's a UCC lien against the dues. The bank's not going to own your HOA. We don't want to own HOAs.
The question was, are they secured with a lien against the common area? Just for one.
No.
Cut.
It's against the dues.
Thank you.
What's
So
UCC?
you're basically pledging the dues.
What's UCC?
Universal. Oh, that's a good question. I don't get asked that a lot.
It's okay. We feel that in the association.
Uniform
world, too.
Commercial Code.
There you go. Thank you.
Thanks, Brad.
So the HOA department, we're not the lenders. We will take the application, we will intake the information, and we'll give that to our lending group. And so we are the intermediary, so we'll pass along the information, but we're not the ones that make the loan decision. That still gets underwritten like a regular commercial loan. So it is a process. It's not like you're going to apply today and I'll have an answer next week. That's not the way it works. Unfortunately, I've had some clients say, I need a loan like tomorrow. If you're going to consider a loan, give it 60 days. And don't get your bids that are going to expire before you get approved for a loan. So it's a timing issue. So you want to time it so that the bids are still going to be good when you get approved and you go to documentation.
That's a good quote.
And so a lot of times you'll get like an initial bid, but then the construction manager comes out and finds other things related that are wrong, and that's going to add to that bid, right? So you want to make sure you have a good initial bid, and that's something that keeps getting added to. Because once you get approved for a loan amount, it's really hard to come back and say, well, we're wrong. We need 300,000 more than we got approved for.
Thank you, Lionel.
Yeah.